What's good all? Let's take a look at what's happening on GU in preparation for the next trading week. So what we had at the start of this really long impulsive move to the downside, followed by a retracement. And now what we're expecting is the next impulsive move to the downside, either creating an equal low or pushing beyond that to create a new low. So if we were to take our Fibonacci retrace from the high to the low, what we notice here is that markets were rejected by the 0.618 Fibonacci level. So now we draw in a level of structure just as added confluence. We clean this up simply because we like to trade with relatively round numbers or even handles. Psychology reasons. And we get the 1.25 level. And as you can see, it's been tested a couple of times on the weekly time frame, so it's a relatively strong level, and that is in confluence with the 0.618 Fibonacci level that we have here. So we can get rid of this and then jump down to lower time frames to find any other confluences that we can find for the push to the downside. On the daily time frame, we have what looks like a relatively interesting pattern that's forming. We have here the fake out of the 1.25 level, followed by a push to the downside, and what we're expecting is a retest of this level before we have the move to the downside, creating what is known as our head and shoulders pattern, with the left shoulder touching the level, creating a low, the fake out to the upside, followed by an equal low, a retest of the level, and then the impulsive move to the downside. So what we'd be looking for or waiting for is for markets to come back, retest this level, give us a potential entry reason on the hourly or 4-hourly time frame, so that we can take the move to the downside. The important thing to remember here is that we're trying to maintain relatively high probabilities for the push to the downside, hence we wait for the retest of this level and maintain a very decent risk to reward. So the closer we are to this level, the better risk to reward we'll be able to pull off, simply because our stops would be protected by this level of structure here, and we'd be aiming for this large push to the downside, first target being an equal low and the second target being a creation of a lower low, aiming for nothing less than a 1 to 3 risk to reward ratio.